morning, everyone. Just wanted to follow up on the sale of the entire company. Have you had any discussions so far, any interest, and was this prompted by any inbound inquiries?
No, what we've done, Alexi, is a normal process. We worked with our board, and we presented to the board a business plan, which I have described, and that business plan includes $1 billion of reduction of our debt. That is part of the base plan, which also include improving the competitiveness of the core portfolio, the Rynaxypyr strategy, and the growth of actives. That's the base plan, which lead to a $700 million EBITDA target. Once we presented to the board, we also discussed, is there a way to increase shareholder return? Is there a way to maybe improve the growth of the sales of our new active ingredients and speed up the development process of the actives we have in development currently? And should we think about having our company operating under a different ownership, which could be beneficial to shareholders and which could be beneficial to the performance of our portfolio? That discussion with the board led us to say we need to pursue two paths. Path number one, the plan I presented to you. Path number two, an entire sale of the company. And for this, we are getting structured. We've hired advisors, bank and legal, and the process is being put in place right now.
I guess following up on the last one, looking out to 2027 and 2028, still looks like you're confident in building some momentum. Can you just talk about the thought process around the timing of initiating a strategic review and any more color about how you're weighing a full sale versus an asset sale, licensing agreement, what those different structures might look like? Thank you.
Yes. So the $1 billion of debt reduction, which is the sale of India, which is taking place. We are waiting for binding offers right now. The licensing of one of our new molecules, as well as other assets we have identified, this is going on with the basic plan. That is independent from the sale of the entire company. That's the base operating plan. On the side, there is another path, which is mostly focused on the entire sale of the company. And this is for the reason I said before, shareholder return, as well as potentially giving more potential for the company to operate in a better way. So the process of partial divestiture versus full divestiture are separate. One is taking place with the base plan. The other one is a separate process we are currently undertaking right now.
Yeah, good morning, everyone. I wanted to follow up on the strategic alternatives in a couple of ways. First, Pierre, could you just clarify, is it only possible to do a licensing deal or sell the entire company, or is it possible that somebody could buy the new molecules in the pipeline, somebody else could buy the diamides, and somebody else could buy the balance of the business, or other types of permutations, or are there limitations just in terms of the way that the company is set up from a manufacturing perspective that would make it too difficult to do something like that?
So I believe the company is set up in a way where multiple things could be happening. I would never say and never close any option which would be beneficial to the company and the way we operate, and which would be beneficial to shareholders. But from a probability level today, I think the two highest probability we have in front of us. One is the base plan, which include a licensing, a sale of asset, and the sale of India. The other one is the full sale of the company. There could be things in between, but right now they are not part of the way we are thinking about the company. Obviously, if people come with interesting ideas about things we could do, we would listen. But right now we are focusing on two paths as the principal actions we are taking.
Good morning. Pierre, I would assume that you're thinking 2026 is a bottom for the company. And so I'm just curious in terms of the timing of the sale of the company. I mean, it would seem like you're having these discussions at the bottom of the cycle, which might not be, get the best value for shareholders at this particular point in time. Can you just address, the timing and why not wait until your restructuring program is yielding tangible results? Thank you.
Thanks, Frank. Yes, I think we do have a base plan which allows us to go through 2026, which I expect at this point is at the bottom of the cycle for the company. And I also believe that getting through 2026 the way we are doing it will create growth starting in 27, 28. That's the base plan. We need to execute on reducing our debts. And this process, we need to bring in $1 billion into the company. Like any plan, you always have to weigh the risks and the certainty you have to deliver it. We are pretty confident about this plan and believe it will take us to the right place in 27. That being said, we have a board, and this board has the responsibility to look for shareholders and how to get the best from the portfolio we have in the company. So when you think about that as an operator, clearly focused on 2026 will be the bottom of the company and should allow it to go back to growth in 27. Working with the board, we also believe it is important to always look at a double path. A parallel path would allow benefit for the shareholders and potentially thinking about doing more things with the portfolio of the company that we can do alone. When you take money to restructure a company, like we're doing, it is money you don't spend in accelerating the growth of your new active ingredients, including the one in research. So the question we have to ask ourselves is, would this company operate better, grow faster under a different ownership, which will have maybe more flexibility financially than FMC has today? So I think both plans are valid. It is not like not selling the company would be a disaster because we don't have a plan to go through 26. I think the 26 plan is robust and will put us in a good place in 27. But the alternative could be highly beneficial for shareholders and would allow the company potentially to operate better and faster. That's why the two processes are being followed in parallel.